So, Lizzy, break down the numbers for us. It was a huge surprise.
Yeah, you mentioned the unemployment number, the wage growth number. Economic inactivity actually fell, but if you look at inactivity caused by long-term sickness, that's now at a record high. So overall, the labour market tighter than expected. As you say, it ramps up pressure on the Bank of England to go again in May. Bloomberg Economics had seen a hold, now they see a quarter point. Markets as well changing their bets, raising where they see rates peaking in September from where they'd seen them peaking on Monday. It also ramps up pressure on the government. You saw that strikes, the number of days lost to strikes was 348,000 in February, up from the January figure. 3/5 of that is down to education, teachers striking. That reflects the GDP data on Friday. The biggest weight on services output was from strikes. That's why growth only flatlined in February. So really pressure on the Chancellor, Jeremy Hunt, to talk to his ministers to find a way of settling with the unions.
Yeah, and again, I mean, I don't know whether this changes, whether this is a blip also because it's seasonal and, you know, it's just hard to keep people in their jobs if they don't increase wages, or whether this could be a longer-term trend.
Yes, and we get the inflation numbers tomorrow. It's painful for consumers because their real incomes are falling despite all of the rest of what we've just been talking about, and yet they may now have to put up with another hike from the Bank of England, so more pain potentially to come. The blip question, we'll be speaking to Dan Hansen of Bloomberg Economics on the UK Politics podcast. I've just written myself a note to ask him this very question. Is the inflation print for February merely a blip?